Hello everybody, I hope that everyone's feeling great. I'm just going to hop to the 15-minute time frame and I'm going to actually go ahead and delete this so I can redraw it. I did do a video, but you could hear stuff in the background, so I wanted it to be all good for you guys. I want the content to be fire. So, all right, let's jump into it. Today, what I'm going to be covering is why my zones are essentially my zones and the reasoning and the technicals behind it and what actually happens in these markets, right? So, as I've mentioned before in previous videos, these markets are run by the banks. The banks manipulate these markets. So they manipulate everything in the world and always have done throughout history. It's either the royals or these banks that are manipulating people. Essentially, all through history, it's just the top 1% manipulating everybody else to live a good life while everyone else struggles. And we see it today. We've seen it all throughout history, right? So anyway, getting a bit off topic, but so pretty much the banks run these markets, right? And I'm going to show you why my zones are my zones, okay? So as you noticed, I always, if I just show you here, I always mark like the last sell candle before the buy. And it happened, what happens everywhere. This is a 4-hour sell to buy. So it always taps into the sell range. And I'm going to explain why. Okay, I'm going to draw it out for you guys. So the banks, they will literally sell to buy. And why do they do this, right? So when they do this, they have created a sell position and then they've bought, right? And when they've done this, their sell position, obviously as price drives up, as they've put more money into their buy, they're going to be in more drawdown, in more of a loss with their sell position. So at some point, eventually, they're going to have to bring the price back down to here to mitigate this, to close. Mitigation pretty much just means like to close it. Like to mitigate. So they want to do that because they don't want to be in drawdown. But the banks as well, they don't use a stop loss. So if they wanted to, another sell to then buy, if they wanted to, they could drive price up for ages. And it wouldn't matter because they don't use stop losses. They got enough money. They create money in it. Like they literally create as much money as they want. So they don't have to use stop losses. But it's not wise for them to leave all of their positions in drawdown. So price is going to come back. And this is why this would be my zone here. I'd mark out this as my zone. And then you get something like this. And that's pretty much how the market works. So if I just show you on the actual charts real quick. Okay. So here, notice how it doesn't come into this refine zone here, which is fine. It doesn't have to, because just knowing that overall, it was close, but just knowing that overall, this was a sell to buy. So they just have to come into the range. But then sometimes it does come to the refine zone. That's why it's good to mark out the 4-hour and then also mark out the 15-minute as a refined zone of the 4-hour. So here, I actually placed a trade here earlier, but unfortunately I did not get tagged in. I'm going to cover the trade since as we're here right now. So what did they do? I marked out the last sell to buy because I know that the banks got involved in here. Why? Because of the volume, because of this imbalance here, because of the impulse move. So I know that they're sold here and they need to come down to mitigate this area. But sometimes it drives past, and that's why I like to wait for lower time frame confirmations. Not to say that you can't enter off this here. So we came into the 15-minute zone, and then in the 15-minute zone, we had a further 15-minute change of character from what I could see. And then I marked this unmitigated wick because on the lower time frames, it would be an unmitigated zone like this. So I drop down to the 1 minute now. And then in that further 15-minute zone that gave the change of character inside of that 15-minute zone. I want to see another change of character on the 1 minute. So then the 15-minute has gone bullish from a 15-minute demand zone. And then I want to see the 1 minute go bullish for me to enter the market. So I've seen a change of character here. As you can see, the last point of supply, the last bullish candle to then go ahead and put in a new low, has then broke that high that put in the low. And then I went ahead and put my limit on this candle. I put it 0.1 pip above. And then covered my stop loss with like 0.2, I think, or 0.3. But unfortunately, price didn't tag me here. It was actually 0.2 off my position. And that would have been for a 1 to 14, which was actually met later on in the day. If we just exit the bar replay. Jesus, talk is so bad. Never get it. It's shit. Yeah, I was just targeting this high, the weak high that failed to break this low. And that was a 14R, but unfortunately I missed the trade. But it is what it is. You're not going to win every trade. You're not going to get tagged in on every trade. It's just part of trading, and it's just something that you got to deal with. So yeah, that was just a short, well, I guess it was a short breakdown video as well. And covering why my zones are my zones, mitigations. I hope that you gain some value from this. If there's any questions that you got, be sure to let us know. And yeah, I hope you enjoyed the video, and I'll see you in the next one.